One of the things we all wonder about is, should we invest in this blockchain stuff? Should we invest in blockchain companies? And what the hell are we doing? And how are we going to get our money back or make any money? So with that, we've got Jack Bouroudjian from CNBC and UC Exchange coming up. And Jack, bring up those investors to tell us what to do and how.
Thanks, George. Hey, before we start, can we get a big hand for George and for getting that? And you know what? Why don't you come on up? And while the panel is getting situated, I just want to say I've been very fortunate. I've done a lot of things, as George was, very gracious enough to say. Aside from being on CNBC, aside from being a broker, a trader, I was also on the board of directors of the CME Group, and I've also written a couple of books. I've done a couple of different things, but when I was on the board of directors of the CME Group, we used to have lunch before every meeting. And with that lunch, I got to talk to some wonderful people, including some real lawyers. One of them was Merton Miller, who I became very close with. We would see each other at the opera every now and then, and he was a brilliant man. One day he came to me and said, Jack, I don't understand this internet thing, right? Aside from information, I don't know what else it's good for. And then again, what do I know? When they invented the steam engine, it was invented to pump water out of coal mines. No one thought it would be good for anything else. And with that comment, it was like one of those brilliant things that we hear every now and then. It stunned me. So think about it. We all witnessed, a lot of us that are old enough, witnessed this internet of information that changed everything. I mean, who remembers the Encyclopedia Britannica or World Book? And then of course we saw that evolve into the internet of actual things, of looking at services. And that's where Amazon came in. And now what we've done is we've come to the last leg of that ecosystem, which is value transfer. And with it really is why we're here. Because of that, I think is one of the reasons that we have this panel. And by the way, I wanted to say one thing. Rumi is going to be in the middle, only because my daughter, the fresh master's degree from King's College, turned to me and said, Dad, none of that ladies first stuff, okay? And I said, okay. So, in the spirit of equality, how about that? Why don't we introduce everybody? We have got Peter Johnson from Jump Capital, all right? He's the vice president. In fact, Peter, I'm going to let you talk a little bit about what you do, all right, when it's your turn. We've got Rumi from Outlier Ventures, and then we've got Clint, who's a co-chief investment officer of the Futura fund, and Futura fund. I'm sorry, but why don't we start right away? Peter, why don't you tell us a little bit about Jump Capital, and then we'll get right into some of the questions.
Yeah, great. So I'm with Jump Capital. Jump Capital is one of the largest and most active venture capital firms in the middle part of the country. We invest across a variety of sectors. I lead our investments in the FinTank and crypto sectors. I've been with the firm for about 6 years now and invested in over 50 companies. 8 of those have been crypto companies, and then in addition to those 8, we've also incubated 4 companies that we've started from scratch. And we're somewhat unique in that we are affiliated with Jump Trading. Jump Trading is a very large proprietary trading firm, and it's one of the largest crypto traders in the world. So I have a somewhat unique perspective on the market from that relationship.
Aside from that, they are a Chicago-based firm. In fact, the traders started about 5 feet in front of me in the S&P pit, so I always love that firm. Next is Rumi, who actually is at a special place in my heart because she made me a lot of money as a CME shareholder when she was with CME Ventures. But Rumi, why don't you tell us a little bit about what you're doing now?
Thank you. So I'm now a partner at Outlier Ventures, and they're based in London, Toronto, and Chicago with me. And we are a little bit, again, unique, I think, in this space. Outlier is not a venture fund, but rather a partnership. And the partners underwrite a few key select infrastructure protocols every year. Really focused on, for us, it's the convergence of blockchain together with other advancing technologies, including AI and Internet of Things. We should not think about blockchain in isolation. It's obviously going to have application across a wide variety of industries and together with other advancing technologies. I'm actually also working to scale Outlier's platform. By that I mean we're now establishing a fund, a GPLP fund, which I'm managing partner in. It's called OV+, and the investment thesis is still the same. We're just going to be a little bit later stage than the pre-seed advisory work that Outlier currently does.
That's the kind of stuff I like, only because somebody else could do all the homework for me, and I like that. And last but not least, we've got Clint. Again, he's the co-chief investment officer of Futura Fund. Clint, tell us a little bit about yourself and what you guys do.
So Crypto Futura Fund is a crypto asset fund. So we're really focused on larger cap cryptos, but we also look all over that list, and we have a lot of relationships within the crypto blockchain space. I also work very closely with high net worth individuals, family offices, things like that, and look at the space. So we do see a lot of blockchain investments, crypto investments outside of just what's listed publicly. The other thing is, this picture up here, unfortunately I'm not big on pictures, those are the rare earth elements. That was my previous life, was 50 rare earth elements and kind of looking at the supply chain. So that was my entree into this, looking at supply chain.
Stuff, I like it. Well, and let's jump right into it. You know, most of us here are investors. I'm an investor. I'm a trader. What is it that you as investors look for? Both as say, somebody who's looking for high net worth individuals and maybe somebody who's looking for a VC, on behalf of a VC. Peter, let's start with you. What is it that you're looking for? And I know that's a very vague question, but I like leaving these questions vague because it gives you a lot of room to be able to play in that answer. But what do you look for specifically?
Yeah, so when we look to make investments in the crypto space specifically, there's two types of companies that we look for. One is companies that are building decentralized applications, decentralized technology, where you actually need decentralization, or where decentralization is a real benefit, where people have weighed the benefits of decentralization, taking out the need for trusted third parties, with some of the drawbacks. For example, it's computationally more expensive, typically slower, not have as good of a user interface, and decided that this is a use case where decentralization actually makes a better product. So those are one type of companies that we look to invest in. The other type is folks that are building infrastructure to allow institutional traders to trade this new asset class. We believe that this will continue to become the next big asset class that retail and institutional investors trade. So folks that are helping build the ecosystem to allow that to happen is the other category of companies that we're really excited about.
Yeah, I think you're preaching to the choir when you talk about the next great asset class here. Rumi, I want to ask you that same question, but I'm going to follow it up with what do you run away from as somebody who's looking for investments? Because, you know, that's almost as important as an investor, knowing what not to invest in. And you are probably like me, you see 50 deals a week, and you've got to really, weed them out. So, what do you look for, and then what do you look to run away from?
Well, for us, what we look for, we do have a true north. It's our investment thesis. If you go to Outlier Ventures, you can see we have tons of research. So this is not gut for us. This is not a whim for us. This is actually based on a lot of thoughtful research and analysis, where we map out really the value chain of data and how data is first collected, whether that's through Internet of Things or how it's captured, then how it becomes distributed and organized and exchanged, which is where blockchains fit in, and then how you act on it, or how data acts on itself. And that's really the AI component. And from that, we actually have a map. And we always try to find the portfolio companies or help try to develop them where they fit within the more specific areas of that overall ecosystem. What do we run away from? People who think this is easy, right? People who think they can do it by themselves. People who have no respect for institutions. I personally run away from that. And I don't know, it's my own institutional bias as a senior at Goldman Sachs, but come on, right? You're not going to be able to take down the world without help from people who've already been running it for quite some time, by the way. And lastly, I keep away from people who are mean. Honestly,
life is short.
There are a lot of them in this space. It's human. There's a lot of laziness, a lot of greediness, a lot of frailty, and a lot of meanness. So if you're one of those jerks on Twitter, you're not for me.
Well, that's it. It sounds like there's a lot of ego out there. And someone who's, and I can share this with you, having written a book on trading and had people come up to me and say, I read your book and I'm going to start trading. And I said, why? I said, I've read a book on medicine. That doesn't make me a doctor. I mean, that's not the way it works. So, I think that there's a lot to be said for that. But give us your observations. I mean, what do you look for in these companies, and what do you also run away from?
I actually think that what to run away from question, because right now there's so many opportunities, there's so many things just coming at us so quickly. You have to figure out, like, do we want to do this? Do we not do this? How do we, what kind of criteria? And so, one of the things I learned from my old life, investing for my family, is if you find a red flag, just push it aside, and that's it. So a lot of times what we'll do is we'll just look for red flags right off the bat. If we find a red flag, we just shut it. There's so many good opportunities out there that are probably waiting that we don't need to spend so much time, figuring out, well, that's not so bad. Let's just see if there's anything else good on this. No, just get rid of it and move on.
Unfortunately, you end up finding people that look at those red flags, but they look at them and they think they might be pink, or they might be a hueish, a different hue, and really they try to rationalize the problem rather than looking at it and saying, there's a reason to get away from this.
And we actually have an algorithm that we use, 15 criteria that we always set on every investment. So we look at each of those, and it's to take the emotion out of it, because we like to make everything pink, even light pink. We're like, no, that's not red, that could be something else. And so we take the emotion out of it by using the algorithm.
That's brilliant. As somebody who sees the world through the rosy-colored glasses of an immigrant's child, that's the way I see things, so that's good. Hey, Peter, you've invested in a lot of different companies, as have I. I've invested in VCs, I've invested in startups. What do you see as a secret sauce? Do you see any common denominator among those that actually made it?
I don't know if there's one thing, but I would think that the combination that has the greatest probability of success is the combination of a great team, which in the crypto space is typically somebody that deeply understands the technology, paired with somebody that deeply understands the industry they're serving. So if it's in the trading community, it's somebody that's been in this space for a while. And it's folks that are going after a true pain point in the industry and solving it in a way that people will pay them to solve. Which is something that is surprisingly uncommon in this industry. People that, their business model is to do an ICO. You're not solving a problem that people will pay you for. So what I get excited about is great teams solving problems and doing it in a way that people are more than willing to pay them to do so.
Rumi, I know this is a very vague question. It's the kind of question that is probably asked of you at every one of these conferences about the special sauce and what makes it work. But I want to drill this down a little bit more. Let's talk about the teams that you invest in, because I think all of us here that invest in people. I know we invest in the technologies and we want to make sure that everything's right, but if the people around what we're investing in are not right, usually we stay away from them. What do you look for in that team?
Certainly a team that I mentioned before with institutions, the most successful blockchain companies that we've invested with, I've always chosen to work with institutions. So again, you have to have a level of pragmatism and realism about the way the world currently works, even if you want to change the way it currently works. But the other part of the team that I sometimes think gets too discounted and should not, especially when we're in this space where there's so many unknowns, is your fellow co-investors. You have to assess them too. When you're looking at a company where there may be no revenue, the technology is unknown, who else believes in this with you and why? Look at what they've also invested in. Do you agree with what they've invested in and why? And that can also serve as a good reinforcing check on whether this is the right company for you or not. And some of the best blockchain companies we've been in have been with investors that we really respect and admire and have similar viewpoints of the world.
Clint, it's not luck. I mean, it's skill. There's a skill in finding these right businesses and investing in them. I mean, so is there something that you look for? Is it the team? Is it the technology? Is it the pain points, as Peter was talking about it? What is it that you look for?
Yeah, that's all great stuff, and I think it starts with the team, always. If you don't have a team that is reliable, you think can actually accomplish what they're talking about, then you're going to be in trouble if you do that. So yeah, great team is always important. And I think what you said, Rumi, is very important. If they don't have respect for institutions and kind of making it work within the system that works, you're not going to transform a client overnight or a sector by just running everyone over. You have to work with them. So those points are well taken. In the end, I think, as you look at it, all these different opportunities, I just don't know. It's, luck plays such a role. And
you sound like every trader I've ever met in my life.
I mean, so an interesting point, if you just look at the cryptos, see a coin, file coin, storage, all do the same, similar type of thing. See a coin was first, but they were too early almost. Because when you have Union Square come in and say, hey, we're supporting file coins, I was like, oh, wow. Here comes another competitor. So you can be right, but be too early in your timing's off and be wrong.
Let's just ask the people at Betamax that, if I remember correctly. But, hey, let me ask you a question that's near and dear to my heart, only because as I look at some of these investments, I worry about the regulatory ambiguity that surrounds what we're doing and what we're investing in. How do you handle that, David?
I think that most of the regulatory uncertainty and regulatory risk is around token investing. At Jump Capital, we typically don't invest in tokens. We're equity investors in companies. So that's less of a concern for us. We are very cognizant of the companies that we invest in. Are they following the relevant regulations in the way that they do AML, KYC, those types of things. And we really try to align ourselves with companies that operate as if they are regulated, even if regulation is unclear right now, because we think that that is the direction that the industry is going.
Well, the problem with regulation, and Rumi knows this because she was around the exchange world, is that once you let them through the door, they don't stop. So, once they start with tokens, and once they start with cryptocurrency, before you know it, it's on smart contracts, it's at every end of the blockchain. And really, I guess, you probably see that a little bit when you're looking down from 30,000 feet like I do. Do you just file that in the back of your mind and not think about it? Or
Absolutely not.
Okay. So
as involved as I can.
Okay.
I'm a board member of the Chamber of Digital Commerce, active member of a group called Global Digital Finance, which is focused on global standards around crypto codes of conduct and taxonomy. I care about my portfolio companies, they're my children, I care about this industry, and it's as important. If I want to be a good investor in this space, I have to be involved in policy, I have to be involved in education, I have to be involved with driving, hopefully, very informed decisions. Now, I'm not going to be able to change the regulator's view of what they want to do, but hopefully, or a policymaker for that matter, but hopefully they will have taken the time to listen to organizations, read research, and if I had a small part to play in that by being in front of their face, yelling at them about it, well then maybe I've done something. But this is not something where you feel like you can be a good investor and let somebody else take care of policy. You have to take care of policy too, as an investor.
Well, knowing firsthand how difficult that is, because I've testified in front of Congress, I've helped change the laws. I remember we had Rule 88, which was the Valentine rule for 50 points in the mail. So it's a very difficult thing to do, and especially when you're dealing with some of our regulators. The SEC, for those of you that don't know, is the last of Roosevelt's New Deal agencies. When I was dealing with them in 2000, they were still using carbon paper. So that gives you an idea of the regulators that we're talking about.
If I can just jump in real quick, some of you may have seen the announcement yesterday with the SEC launching something called FinHub, where they're going to be interacting directly more with blockchain companies as well as digital asset companies. CFTC's already done this with Lab CFTC, so it's getting there. But I think it's incumbent upon people like all of us to be very proactive and interact with the regulators in this space.
Clint, same question to you. Are you looking at it in any different way? Are you ignoring it? Are you as active as Rumi is in it?
Yeah, I don't think you can ignore it. I spend plenty of time in DC, plenty of time with government agencies, helping them understand this is what this is. This is about it right now. It's just helping with definitions, helping people understand what is possible, what is happening. But I think when you look at things like the products, really ICOs, as you were saying, that's kind of the little danger zone. What's actually happening, what's not. Futures, options, all these other things, they're already regulated. The CME and the CBOE, they're unregulated very well. It's happening. So, and it just depends on what products you're looking at. I think as we look forward to things like ETFs and whether an ETF will happen or not, we look at that on the crypto side and say, well, it depends on if there's regulated exchanges that they can get non-manipulated data out of. So there are things like that that we pay more close attention to as exchanges and what's going to happen.
Well, as somebody who trades the Bitcoin contract at the CME, I am very, very happy that it's under a regulated environment. I'll tell you that much. One more question before we open it up to everybody, and this is probably, for me, the most important question. What do you see out there right now that you will wake you up in the middle of the night and say, I gotta have some of this technology, or something that's out there that you've seen somebody present? Give me something here that nobody's heard of.
I don't think, I'm not sure if I know something that nobody's heard of. The things that, like, waking up in the middle of the night are some of the obvious problems in trading and what needs to happen for institutional investors to come in. Things like custody and Fidelity making their announcement, like, that's great news for the industry. I think there's going to be a lot more announcements like that this year. Things like proper banking services, being able to offer leverage, being able to trade without pre-funding. Those types of things that move this towards a more traditional trading environment that traders and investors are comfortable with. And those are the types of things that get me excited, because that's what I know that when that happens, the industry will mature and more money will come in, and it will kind of go where I think this industry is going.
I couldn't agree with you more. I think technology always does lead. Rumi, same question for you. Is there something out there that is really, that has got Rumi up in the middle of the night and saying, you know what, this is the next greatest thing in the
Up
world?
in the middle of the night and up right now, like at every moment. One thing we're doing at Outlier, and I truly believe this, is the importance of blockchain distributed ledger technology amongst things. A world where all physical assets will become digital ones. And you think, about machine-to-machine interactions increasingly. It's like, well, how do they communicate and how will they trade and transact with each other? And these are much more naturally decentralized than the current banking system or the current healthcare system. But as we have trillions of devices coming online, what is the organizing mechanism for that? It's probably going to be blockchain. So for anyone who thinks about a self-driving car, driving up to an electricity pad, getting its electricity and going away, driving away, how does that happen? What is the communications protocol for that to happen? Who pays for that electricity? In what form? Right? How do the electricity markets react from that? Those protocols? That's what keeps me up.
That's good stuff. Clint, how about you? I mean, is there anything out there that you've come across technology-wise or conceptually that you think is going to really change the landscape?
Well, I think this is maybe rather base, but when we look at the internet and TCP/IP, I was in the internet, back in the day, and at a company we were coding, we were programming, we had to understand all that stuff, but I didn't explain that to my sister the first time she went on. I didn't have to say this is what it is. But we're all running around explaining what blockchain is and what crypto is and what all these definitions are. And I can't wait for that moment when people are using D-apps and using all these things seamlessly, and it's just a part of their life. And they don't understand that the reason why they don't have to carry their ID anymore is because they have this blockchain thing and they just pull out their thing and show it, and that's it. When it's seamless and easy, that's when that's gonna be awesome.
It's funny you say that, because I was at the Vibrant Bouroudjian Summit a couple of years ago, and I was in a private meeting with Prime Minister Modi, and he said to me, Jack, do you think we'll ever be at a time where everything will be paperless? And I said, absolutely. I think, it will even be in our lifetime. And he said, I hope so. And you know what? And sure enough, I think that we'll probably get in there, especially in some of these countries. Let's open it up to the crowd here. There's got to be a few questions for some of the best investors in cryptocurrency and crypto around.
This is from my good friend, Clint. I've been investing in crypto now for 9 years and been paying attention to the Asian markets, the Asian corridor, where Japan now is starting to build their roadmap for this new asset class. But this asset class is very low correlated to other asset classes that touches so many of them. But the one problem that we're seeing right now that we're getting into institutional investment money coming in, what factors are you looking for to see how these crypto assets are going to start uncorrelating from one another to help for your institutional investment advice into furthering this market to where it needs to go down the road?
Yeah, so I guess one of the things that he's hinting at is right now, Bitcoin and the entire crypto asset sphere is fairly uncorrelated, almost no correlation to the rest of the market. Yet all the cryptos are correlated to each other. So when do these things start separating? I think maybe it comes to when each of these blockchain technologies and each of these blockchains that are in these different sectors and these different companies that are doing things actually start to make money, make profit, and do things that are unique to their sectors and make an impact. Then I think you'll start to see some separation where you see a lot of success. You guys probably have a better idea of what that might look like, but I guess that would be my answer to that. And also to that point, we try to understand what's happening in Asia and Europe as well as here. I think we become so US focused that we forget that 30% of all adults in Korea own crypto, or our understanding of blockchain. So keep in mind, you have to understand the world perspective, and as Rumi and I were talking about earlier, all the other technologies too. Do you understand AI? Do you understand AR? Do you understand all these technologies coming out and how this fits?
I think the other part of the equation is that asset classes tend to move in groups together. So it's whether it be stock markets around the world, bond markets around the world, on a relative value basis, you will see those relationships. And I think until you see the maturation of the crypto market, I think we're probably going to see that same thing. You see the entire asset class move up and down. Another question.
Rumi, you've said that it takes high-powered brains to truly understand and develop blockchain and other digital technologies.
So not mean people.
And you've also noted those brains are spread out across the world. Can you discuss the geographic differences, what you see in terms of development in the U.S. compared to Canada, Europe, Asia, the Middle East?
I guess for me, the more remarkable thing is about the institutions and the companies that are getting involved with this. Certainly in the stuff that Outlier focuses on, which is more industrial applications of blockchain technologies, Germany is very active, and more than that, they collaborate with each other. So for example, there is a group, a consortium called MOVI, where you have Outlier Ventures together with Consensus, which is the Ethereum-based group, and Hyperledger, together with all the German auto companies. Right? Audi, Daimler, Mercedes, and they're all working together to say, we want to learn more about how to utilize DLT or blockchain in our cars, and it's going to be open source, and all of these car companies are going to talk with each other. Is that happening in Detroit? Right? No. And we've seen this as well with Bosch and Siemens, and I've been very impressed with German industrial companies and what they're doing in this regard.
It really is a follow-up. Are we falling behind here in the U.S.? I mean, from what you can see?
We're still leading, I think, the technology development of this, right?